Hey everyone, it's Matt and Jared from Perspective Wealth Planning, bringing you our weekly market recap from the week ending April 20th.
In this video, we're going to cover some key news events that happened last week, a chart of the S&P 500, and also go over the performance of major indexes from last week. Also, we'll cover our thoughts going forward, and Jared's going to start off with what happened in the markets last week.
It was a relatively quiet week in the markets, with most of the major indexes positive for the week. The Dow Jones up about 0.5% for the week, but negative 0.4% year to date. The NASDAQ up also around 0.5% for the week, and technology is the clear leader for this year, with that index being up about 3.8% for the year. Foreign stocks also up about 0.5%, while emerging markets were down around 0.1%, but both of those indexes up a little bit over 1% year to date. And lastly, the S&P 500, which was also up around 0.5% for the past week and is up 0.4% year to date. Next, I'm going to touch on a chart that we're looking at on the S&P 500 specifically. The chart that we're looking at today is of the S&P 500 from the end of the fourth quarter of 2017 until we are today. There are three colored lines that I want to pinpoint and take a look at on this chart. The first being the pink dotted line right in the middle of the chart. And if you watched our video last week, that's a similar line to the blue dotted line that we looked at last year, being the middle of the range that we're trading in at this moment. And again, that's also where we are in the market today. There are also two dotted green lines, one above and one on the bottom of the chart. And that's what we're going to focus on a little bit more today. And if you look at these green dotted lines, it almost looks like a sideways triangle, which we look at as being a potential wedge in the market. And what exactly does a wedge mean? If you look at the top green dotted line, what the S&P 500 has been doing is making lower highs this year. And at the bottom, you see the dotted green line. The S&P 500 has been making higher lows this year. We've seen this pattern playing out since the beginning of the year. We could see it continue to play out for weeks, even months, if the S&P 500 continues to trade in a more and more narrow range. If this does happen, the chart of the S&P 500 could look like a point is forming at the end of the sideways triangle with continuous lower highs and higher lows. And at this point, the market could be forced to pick a direction. In the meantime, we could potentially see two scenarios happen. If the S&P 500 moves above the top green dotted line, this could be a potential breakout and a bullish signal for the market. In this scenario, we could see the market go back up and test the highs from earlier this year. If the opposite happens and the S&P 500 moves down to the bottom of the wedge and under the bottom green dotted line, this could be a potential breakdown and a bearish signal moving forward. These are all things that we're looking at very closely, and we will keep you updated if we see any of those scenarios playing out.
So last week, the news headlines was dominated by the S&P 500. 10% of the companies in the S&P 500 reported their quarterly earnings last week. And so far, so good. 77% of those companies beat expectations for the quarter. So this is a great sign for the economy, and the fundamentals are still strong. So some other news, if you've been traveling recently and had to fill up your gas tank, you probably noticed that it cost more. That's directly due to higher oil prices. And last week, OPEC came out and said that they're okay with the higher price of oil. And right after that, right before the weekend started, President Trump took to Twitter bashing OPEC, saying that they are inflating prices again as usual. So we'll have to see what happens over the next couple months with the price of oil. Lastly, we've started to see subprime lending back in the news. For those of you who don't remember, subprime loans were at the center of the 2008 financial crisis. It seems like banks are at it again, back rebranding these loans as non-prime. Not saying that 2008 is going to happen again, but it's something that we really need to keep our eye on if the economy starts to slow down. So that was everything from the news last week. And if you thought the S&P 500 dominated headlines last week, well, it's back again this week, with 33% of the S&P 500 reporting their quarterly earnings from this year.
We'll see if these earnings reports have enough to get the S&P 500 to break out of the wedge that we've been trading in.
Thank you and see you next week.
Go ahead and like our Facebook page and share our video.